Wednesday, August 9th, 2023, Maneco 64, home of alternative economics and contrarian views. We're going to look at China and the economy in China in particular. I think there's a campaign in the West to portray the Chinese economy as collapsing into a deflationary collapse. And I think there are two reasons, well, a few reasons for that. And we're going to look at and really look at the numbers and see whether China is really collapsing their economy and whether they really have deflation in the classical sense, of course. Before I start, though, I'd like to thank all of you who are interested in my channel. We've reached 91,000 subscribers. Hopefully we'll get to 100 soon in the next few months. That's not, of course, the objective of my channel. The objective of my channel is to produce a good content, and whatever the number of subscribers of views are, that's what it is. And the other thing I would say, over the years, of course, many of you have asked me where to buy gold and silver, and I have provided you with affiliates that I think are very credible and have a good reputation. So if you're still looking or thinking about buying for the first time or have bought, maybe check out my affiliates below in the description. I have affiliates in the UK and in North America. Back to China. And I've been noticing in the last month or so that publications like the FT, Bloomberg, all the usual suspects, CNBC, they're all talking about how China is approaching deflation, and deflation for them, of course, is a CPI that goes negative, which is really superficial and it doesn't mean anything. It's the Keynesian fallacy that you have to keep interfering in the economy, that the government has to act fiscally and monetarily through the central bank to keep things going. We know how that has worked in Japan and in the West right now. I mean, we're up to hearing that. We have stagnation of the economy. We've had even negative rates, and that hasn't helped. So I think one of the reasons why the West now is portraying China as falling into deflation is that we in the West, our economies are really, they're going nowhere. We're up to hearing that. Our prices are still rising massively, and we need someone to take up take up the slack, or to how can I say, inflate more. So I think the West is trying to push China into that. The other reason I think they're doing it is to basically take the attention away from the situation of the new BRICS system that they might impose on August 22nd. They might come out with a new monetary system. We don't know. They might just talk about it and say that they're planting the seeds for it. And I think they want to denigrate the BRICS and the global South, the multipolar world. And why do I say that? Well, because there are a lot of countries. The BRICS is not just Brazil, Russia, India, China, and South Africa anymore. As you can see here from the Gold Telegraph, it says 67 country leaders have been officially invited to the BRICS summit scheduled for August 22nd, 24th. And it says France's president was not one of them. There was, I think, a request by the French to have Macron invited as an observer, but it looks like they haven't invited him. But that's what I'm trying to say. 67 countries plus the other 5 BRICS. I mean, that's 72 countries. That's almost half the countries in the world. So it's not a small thing. So I think the West is trying to say, well, how can you have a new system outside the dollar when the major country and that block is going to a deflationary collapse. But more importantly, I think it's they're trying to get China to stimulate, because the West is the West is not in good shape. I think the yield curve in the U.S., as you can see here, is pointing to a recession. The curve is starting to steepen again. And every time that happens, there's a bad recession, as you can see, back in the early 2000s, back in 2008 and 9, and in 2020 to some extent. But as you can see, the curve went negative, or it went inverted more than it has done in the last 30, 40 years. So I think the recession in the West is going to be really sharp. So let's look at China now and the headlines that we see here. And you just have to Google China, and FT, of course, says Chinese economy falls into deflation as recovery stumbles. Looking at that headline, you think, well, the Chinese economy is gone to the to the pits, right? And the other thing I would say, I had a friend of mine that worked in the city with me. He was actually the guy who employed me to come to London in 1992, and he has a lot of contacts with economists very high up in the U.S. system, and I won't say anymore. And he called me a few days ago, and he was telling me what these economists are saying. They send him research. He can't send it to me. And the main thing they're selling to their clients, or the people that they talk to, is that China is going to be the new Japan, deflation. And I don't buy it because it comes from an institution that, I can tell you which one it is. It's my mug is very old, but you can see it was an institution that was created on December 23rd, 1913. And I think this is all coming from them, because they know that they need some help. Anyway, other headlines. The Telegraph: China slides into deflation, sparking fears for global economy. So there you go. The Guardian: Chinese economy slips into deflation as recovery falters and demand slows. So before we look at some of the Chinese data, the data that came out today and the data that have come out since the beginning of July, we're going to look at some definitions, the classical definitions that have worked well for me and hopefully for you in the last few years, because it not even helped us predict, it just helped us understand what was going to happen. It's all about cause and effect. We could see, and even in 08, 09, that eventually all the inflation that they've created through QE and artificially kept interest rates was going to create higher prices, and it did. Initially it was into financial assets and real estate, and now it's into consumer prices. It's the Cantillon effect, that inflation flows into different goods and services and assets at different times. But anyway, we're going to start with the definition of deflation today, because that's what we're looking at today. It says an act, reduction in the volume of available money and credit resulting in the decline of the general price level. So the decline in the general price level is the consequence of deflation. And CPI is not really the general price level, it's the consumer price index. It just looks at consumer prices. So we're going to look at the opposite, of course, inflation, an abnormal increase in the volume of money and credit, resulting in a substantial and continuing rise in the general price level, not CPI. So let's quickly look then at the data, and then I'm going to show you some monetary aggregates from China to show you that we do have inflation in China still. So the numbers that came out today for China, well, they were the CPI, the Consumer Price Index number, and the Producer Price Index number. So you can see here that month on month in July, the CPI actually went up 0.2. It was expected minus 0.1. And the year-on-year CPI for July dropped by 0.3. It was expected minus 0.4. So, of course, if this was in the US, the headlines would have been CPI comes out higher than expected. In China is, oh, the Chinese economy is falling into deflation. And I'm not trying to defend China and the Chinese economy. I'm just trying to tell you what they're trying to do to you psychologically to think that China is collapsing, and it's not. And I do agree that these numbers could be doctored, and many of them are, but so are the Western numbers. We've seen last year in May that the UK switched all the CPI methodology for the last 75 years to make it look a lot lower. In the US, they publish the non-farm payroll data, and usually they're very high numbers, and then a few months later they revise them all down. By then the market has forgotten about it. So it happens everywhere, and I understand that. So let's look at the producer price index. Well, that was expected to drop by 4.1 year on year in July. It dropped by 4.4. So is that really a bad thing? Producers' costs are going down? I don't think so. It helps profits. The more profits there are, the more investment they can make, the more they can pay their workers. I don't see something bad with that. So let's quickly go through the FT article and dissect it so I can show you why I think it's claptrap. And then we're going to look at Chinese M2 and M3, and we're going to see whether China is really in a deflation. Chinese economy falls into deflation as recovery stumbles. I just wanted to show you another thing about the recovery because it makes it seem that Chinese GDP is like going negative, but it came out on July 16th, the GDP for the second quarter, and it went up 6.3% year on year. It was expected at 7.3, but it's still at 6.3%. The quarter-on-quarter increase was 0.8, which was higher than the 0.5 expected. So industrial production, as you can see here, in June as well, went up 4.4%. Let's look at the PMIs in China as well. They came out late July. The manufacturing PMI, yes, that's below 50, which isn't a good sign, but it came out higher than expected. It was higher than the previous month at 49.3. The non-manufacturing one, yes, it's dropped, but it's still above 50. So yeah, the Chinese economy isn't going gangbuster, but it's not collapsing. So let's get back to this article then. Beijing faces calls for stimulus after consumer prices turn negative for the first time since early 2021. I mean, 0.3 negative. I mean, that's disastrous, isn't it? I don't think consumers are even feeling the decrease. If anything, if any of you are in China watching this, let me know if everything's a lot cheaper in China, especially consumer prices. China's economy has fallen into deflation after consumer prices declined for the first time since 2021 in one of the starkest indicators of the challenges facing policymakers as they struggle to revive consumption. But as you can see here, if you strip out food and energy, the Chinese CPI is actually 0.8. Which is fine. Why do you want to debase the currency by more? Actually, you shouldn't want to debase the currency. You should have prices stay. I mean, they will fluctuate, but in the long term, the currency should keep buying the same amount of goods and services. That's what happened in the 19th century under a gold standard here in the UK, at least. The CPI from 1820 to like 1914 dropped by 0.1 on average. So let's go to the M3 first. So this is the chart of China money supply M3, and this is from Trading Economics. This chart doesn't look like it's going down to me or deflating, does it to you? Here's M2. Doesn't look like we have deflation, unlike actually the US and other countries, M2s, in the West. And then you look at China money supply increased by 11.6% year on year in May 2023. So there you go. There is no deflationary danger for the Chinese economy. This is all like Keynesian rubbish, in my opinion. So I would say the China economy is actually okay. It's not great, but it's not collapsing in the deflationary events. So with that, let's quickly look at where the markets are this morning. It's almost 8:30 a.m. London time. We've got spot gold trading at 19.30. It's up about $5. Low's been 22. High's been 19.32. Silver's up 8 cents at 22.85. The high's been 22.95 and the low has been 22.70. The Dow futures up 25. Nasdaq is up 50. The S&P 500 is up 9 and the FTSE is up 50. For the new viewers, you might be asking, why do you go over the market? Well, because that's one of the things I used to do with my clients when I worked in the city. I used to have clients in Europe and some in North America. And usually when my US clients came in early in the morning, New York time around 7, they used to call me for a market rundown to see what was going on. So I thought when I created my channel that I would do that for people around the world just to see where things are. So this, of course, is the futures, the pre-open for the US. So let's look at the currencies. Sterling is up just under 0.2%, 127.69. The euro is up as well, about 0.2 at 109.75. Dollar's down slightly versus the yen, 143.16. And actually, the dollar's down 0.25% versus the yuan, which is weird with all the talk of the Chinese economy collapsing or falling into deflation. So we are at 721.92. Aussie dollar, that's up 0.2 at 65.53. The dollar's unchanged versus the loonie, 134.13. That's the Canadian dollar. And the Kiwi dollar is up 0.25% at 60.80. So let's look at the commodities market. WTI crude still pretty firm. It's up 0.1% at 82.68. Brent is up slightly at 86.10. And I've noticed that gasoline or petrol and diesel prices are ticking back up here in the UK at the pump. That's not surprising. And we've got platinum that's up just over $3, trading around 907. High grade copper up 1% at 383. Usually copper is a good indicator of economic growth, and China being probably the biggest consumer of copper, it is interesting to keep an eye on that. So I would have expected copper to be down like 2% today with all the headlines of Chinese deflation, right? Let's finish off with the bond markets. The 10-year yield is unchanged at 402, the US 10-year yield. The UK 2-year yield is hovering around 5% right now. The 10 years at 444. It's up about 5 basis points. And the not the Chinese, but the Japanese 10-year JGB, that's dropped about 5 basis points overnight. It's at 0.567. So with that, I'm going to wish you all a very good day. Take care. Bye.